Good evening, ladies and gentlemen. Please confirm if I am audible. Please confirm you can hear me.
Good evening, James. Yes, this is Anika, and yes, we can hear you.
Thank you, Anika. Okay. So I would like to welcome you all to this session. While a couple more people are joining in, I will just highlight a couple of points before we start our lecture. So the first thing is this meeting is being recorded. And we will send the link, we'll upload it to our YouTube channel. We've got a YouTube channel for Varsity Unlimited Tutors. We'll upload it to our YouTube channel so that any one of you who needs access to what we've discussed in this meeting can easily access it. So there might also be a couple of other videos on YouTube that you can also check out if you're interested in them. Okay, so my name is James from Varsity Unlimited Tutors. We are a private tutorial company that specializes in assisting students with their higher education needs. So we teach, that's basically what we do. We teach and assist students. So we've got group classes like these, we've got one-on-one classes, etc., that we do in trying to assist students in their higher education needs. We mainly focus on commercial subjects and also on subjects related to law. So those are our focus areas. So it's not only me, you are seeing me today, maybe for the first time, but it will not only be me. There are other tutors that I work with. We work as a group that I work with who also be able to assist you with your various needs. So I'm just going through some background issues before I start so that we are clear. So the first thing that I want to make sure that we're all on the same page on is that I am not employed by your university. Whether your university is Mancosa, it's Regent, or whatever it is, I am not employed by your university. I am a private tutor. However, because I'm a private tutor, I have information that I have gathered from all your different universities and whatnot, and I use that information to teach you guys. Following through your study modules, your study guides, the assignments that you are provided, and etc. But I just want to make sure that it's clear that I'm not employed by your specific university so that you don't misinterpret what I am going to say, because I've noticed sometimes people misinterpret what I will say. Okay, so I've got a master's in economics. So this is my specialty. That's why I said I work with other people who are also specialists in their areas of expertise. The numbers that you see there, those are all of my numbers and the numbers of my peers that I work with. The last one, which says James, that's my number. I'm sure you already know that's the number that you see that is posting in the groups and whatnot. That's my number. Okay, so I think that's just the basics. Now, there are two things that I want to chat about right now. Okay. The first thing is, let me just highlight a couple of things, because I know some of you are still new. Some of you have recently registered, maybe with the investment course, you've recently registered, and you're not sure how the landscape, you're not sure what happens at Mancosa and whatnot. So I'll just provide you some brief information that might be able to assist you before I then proceed and highlight what I am going to offer you as the students. Well, so for those of you that have registered, you're a first-year student, let's say at Mancosa University, you will notice that you've got 4 different courses that you'll be doing, right? So for example, if you are doing maybe BBA, which is Bachelor of Business Administration, maybe you're doing economics, 10A, maybe you're doing Introduction to Business Management, maybe you're doing digital transformation, maybe you're doing business mathematics. There are other courses for other students, maybe if in HR, you're doing Introduction to HR, maybe if in IT, you're doing analytical business, you're also doing maybe informatics 1B and etc. So there are a lot of different courses. But the commonality of everything that you are doing is that within the semester, as a first-year student, there are 3 assessments that you're going to undertake. So there's assessment number 1, assessment number 2, and assessment number 3. So assessment number 1 and assessment number 2, these are your assignments that you're going to do. So usually they've got like 20 questions, sometimes it can be 10, but usually there are around 20 questions that you're going to see in your assessment. So it can either be 10 questions or 20 questions, right? That you need to answer. Now, these questions for assessment number 1 and assessment number 2 will likely be multiple choice. But the multiple choice, the nature of the multiple choice questions, remember, this is higher education. It's no longer, matric and whatnot. This is higher education. So they will try to make sure that those questions are very, very tricky. So it's very easy to actually fail some of those assignments if you do not apply yourself, or if you do not go through the study material. Now, if you fail the assessment, you're given 2 chances for each assessment, right? So for example, assessment number 1, you're going to be given 2 chances. Assessment number 2, you're going to be given 2 chances. If you fail both chances for those assessments, you have failed your module even before you go to the exam, because they do not allow you to go into the exam unless you've passed both your first assessment and your second assessment. So it's my encouragement to you. Number 1, do not fail your first assessment and the second assessment. Number 2, do not miss the deadlines for your first assessment and your second assessment. It is very common for first year students to miss deadlines because they were not attending classes, or they were not attending lectures, or they were not paying attention. So make sure you know what are the deadlines for your assessments, and make sure that you do them within that time. Because if they close before you do them, you've automatically failed that module. Then, like I said, the pass mark usually is 50%. Just make sure everything that you're doing is 50%. Yes, there are certain times where you can get less than 50 and you can still proceed, but just make sure that everything that you're doing, you get at least 50%. That way you will not be calculating, or will not have any problems in what you're doing. Then the third assessment that you have, so I've spoken about the first assessment, the second assessment, then the third assessment that you have is the examination, which happens at the end of the semester. I think for you guys, it's either it's in November or it's in December. It's November or December. I'm not sure about your date, right? But it's the examination. So the examination is you're gonna get it on the exam day, and you have to answer it throughout the day and submit. So this examination that you're gonna do, it depends with the lecturer. Some of the exams might be multiple choice. Some of the exams will be essays that you need to type and answer. I cannot tell you what it's going to be. Your lecturers are the ones who know how they've set up those exams, right? But I'm just highlighting, some of them might be multiple choice, but some of them might be essays. Again, like I said, do not underestimate when I say some of them might be multiple choice and you think it's going to be easy. I've seen a lot of students that have failed multiple choice exams simply because they did not apply themselves to the material that they were given by the specific lecturers, right? So that's basically what you need to expect as a student during the semester. So now I'm going to proceed and highlight what I am going to offer. But in case maybe someone has got a question on what I have shared already, I will just give you guys a minute. Maybe if someone has got a question on what I've shared already, before I talk about what I offer and go into the lecture that we need today. Is there a question there? All right. So I trust everything that I said was very, very clear. Okay. So, like I said, I am James. I'm a private tutor, right? So as a private tutor, what we do as VUT, as Varsity Unlimited Tutors, is in August, this specific month, we are going to offer some free classes. The reason why we offer the free classes is just to help you guys to acclimatize with the study material that you have, and also for you to see that, you know what, these guys are not a scam. They are not here to take our money or something like that, right? So to help you make a choice. Now, I'm not forcing anyone. I'm not putting pressure on anyone. If you do not like the lectures that we're offering, you are free not to take them. You are free not to take them. But these are private tutorials to help you so that maybe you have a better chance of passing, so that you know you don't waste your 35,000 or 40,000 that you paid for the semester. Because if you fail, remember, you have to re-register and repay the school fees. Or if you fail, you have to do a supplementaries and whatnot, which might cost you a little bit more than what you expected. So this is where we come in and offer some tutorials. So in August, we're going to do at least 1, 2, or 3 tutorials for each subject. Right? I'm not guaranteeing that there'll be 3. Sometimes there'll be 2, sometimes there'll be 3 tutorials for each subject, which will be free, which is basically just introducing each specific subject that we are tutoring. So we do almost every subject that you guys are doing. We do in economics, we do introduction to business management, we do business mathematics, introduction to HR, introduction to financial management, we do informatics 1A, we do analytical techniques, we do a lot of different subjects. There may be one or two that we might not do specifically, maybe in marketing and whatnot, but we do almost every other subject that you guys are doing. So feel free to inquire about your subject and etc. But what I'll basically do is during this coming week, from today up to the next weekend, I'll be posting the different dates of the free lectures. So just as I've posted for economics today, I'll also, I think there's introduction to business management on Tuesday, and there should be another one on Thursday and on Friday, but I'll post the dates within the specific groups. So once we've done with the free lectures, then if you are interested, you can pay for the private tutorials. The cost for the private tutorials is $750 per semester for each specific module that you need assistance with. I need to make that clear. It's per each specific module that you need assistance with. So if you only need assistance with economics, you only pay $750. But if you say, I want economics and business, that's now $1,500. That's $750 plus another $750. So it's $750 per semester for each specific module that you want. Then you can pay this in installments. You can pay once off if you want, or you can pay in installments. You can pay $250 per month for the next 3 months and whatnot. That's now up to you, right? We can discuss more in my WhatsApp, in my inbox, right? Then what you are paying for basically are the live lectures, like the one that we are doing today, question and answer sessions, where we're going to do some question and answers, where you guys can ask questions and we can answer the questions for you and etc. We're also going to do exam preparation classes towards the exam, maybe 2 or 3 exam preparation classes, where we do some past exam papers to help you out, prepare for your exam. Then every class is recorded, which means once you have made your payments, you have access to every recorded class. If you miss a lecture, let's say maybe you were working late or there was no electricity and you miss a lecture, then you can get a recording of that class, right? Then lastly, you will also get some assignment tips. You will also get some assignment tips in terms of how best can you attend to a specific assignment, right? So I will also take note on this one. I'm not going to say this in detail because this is a recorded session that is going to go on the public platform. I don't want to say a lot, right? But if you do need, as a student, if you are really stuck and you know that I'm going to fail this thing and you need a tutor to help you out with a specific assignment or with a specific exam and whatnot, you can give me a call, you can give me a WhatsApp, and I'll explain in detail further how we can further assist you outside the group classes that we do with everyone. So that type of assistance is also available, but we do not talk about it. It's more of a private conversation that we can have between you and me, right? I.e., if you need direct assistance with an assignment or with an examination and whatnot. All right. So that's what you can expect from me. For this part, we can discuss it after the lecture if you still want to talk more or get more clarity on some of the things that I've highlighted. I think the time now is 9:15. I think almost everyone who wants to join has joined in. So I'll introduce the subjects that we want to talk about tonight. So tonight we want to talk about economics, right? We want to introduce you guys to economics, right? To the study of economics, right? So just for your peace of mind, I'm going to be using the material that I teach you guys. I try to make sure that it matches your university. So I'll be using your study guide as a guideline in terms of what to teach you and what not to teach you. So this is an example of your study guide. I'm sure most of you guys have access to it. So you can see that economics has got 9 units that you need to study in this semester. It has got what? 9 units from unit number 1 up to unit number 9, right? Generally speaking, this can mean that we are going to have to go through 9 weeks of learning for us to complete this specific module, which means we'll be doing something like a unit per week, a unit per week, a unit per week. However, that's not necessarily how it will play out, but in essence, if you just need a rough estimation of how many lessons we will be doing in the semester, that's the rough estimation, at least 9 lessons to cover the whole module. All right. So in each module, you'll notice, like, for example, unit number 1, if you go to unit number 1, you'll notice that there is a learning outcomes, which outlines what you need to learn within each specific module. So my notes are done specifically focusing on these learning outcomes to make sure that we cover everything within the learning outcomes, plus some extra information that I believe from past exam papers is very, very important for you guys to learn. Right. So in addition to these lectures that we're going to be doing together, I will also be taking some past exam papers and bringing them into the class so that we can also discuss and see if you guys are actually learning from what we are doing together, which means that you'll be participating. I will have the past exam papers and I'll ask you guys, question number 1 says this and this and this. What do you guys think? And then you guys respond, and then I can evaluate to see whether we are on the same page or it's something that I need to reiterate, or also that you guys can catch the vision of what we're trying to do. So I'll start now. Economics, right? What is economics? Why do we study economics? So it says, you see my slides, but I'll explain what it says here. Economics is the study of trade-off and choices that we make given the effect of scarcity. So you can see that within this definition, there are 3 terms that you might not be aware of if you are not a person who has studied economics. It says trade-offs, it says choices, it says scarcity. And because of these terms, you might not understand what we're trying to say. Right? So what we are essentially trying to say, we're saying that economics is the study of how individuals, or of how people, of how you and me, of how Onika, Zuka, Maria make decisions. Right? That's what economics is all about. It's about how do we make decisions? What is our behavior when we are making decisions? And when we are making those decisions, what type of decisions are we making? What type of things are we choosing in our decision making? Right? And then you might ask, why are we choosing? Why are we making the decisions? We are making these decisions, or we are making these choices because there is something that happens within an economy. And what is this thing? Now, the definition of what? Of scarcity. We are saying that there is a limited amount of resources that are available in an economy. There is a limited amount of goods and services that are available in an economy. And because these resources or these goods and services are limited in nature, you cannot get everything that you want. You have to make a choice, right? So for example, if you look at me as James, right, I really like driving. I like to have a Lamborghini. I like to have a BM. I like to have a Mercedes. I like to have a Ferrari. I like cars. Right? That's what I like, right? But I only have a limited salary, right? Maybe I'm getting 50,000 right, a month. I only have a limited salary. So because of my limited salary, I have to make a choice. Am I going to get a Hyundai? Am I going to get a Honda? Am I going to get a Mercedes? Which type of Mercedes am I going to get? Because I cannot get everything. Right? So that's what economics is all about. So when I make a decision that I am not going to get a Toyota, I am going to get a BMW, that's a trade-off. We're saying that in my making a choice of the BMW, I have traded off the Toyota. So that's what we mean by trade-off. I'm making a choice and there is a trade-off. And why am I making a trade-off? Because there is scarcity or limited resources that exist within an economy. Right? So in essence, or in short, then we arrive at the definition where we say economics is a social science. Social science simply means that it's the study of human elements. It's not a scientific science. It is not about facts and numbers and whatnot, but there is a certain human element within it. So economics is a social science that studies the human behavior, i.e. you and me, economic agents that exist in the economy, and the relationship that exists between what? Between scarcity or scarce means or limited resources and their alternative needs. Alternative uses, we are basically saying our unlimited ones. Like I said, I like cars. I like all different types of cars. I like houses. I like food. I like laptops. I like gadgets. So those are the alternative uses that we are talking about. So you can already see that from this definition that there are 2 key principles of economics. There are 2 key principles of economics. There is scarcity on one end, which is the unlimited resources, and then there is wants on the other end, or desires or needs of people on the other end, which is the unlimited wants on the other end. So in economics, you're just trying to study the 2 things. How can we match scarce resources and unlimited ones. Unlimited resources and unlimited ones. How can we match these two specific things? Now, when we study economics, there are two branches of economics. There's what we call macroeconomics, and there's what we call microeconomics. Now, this module that you are currently doing in the first semester is called microeconomics, which is economics 1A. And then in your second semester, if you've checked your handbook, it talks now about macroeconomics, which is now economics 1B. So under the study of microeconomics, we are studying particular actions that happen within an economy. We are studying particular individuals, particular households, particular businesses, particular workers that are within an economy. We are saying, what are the decisions that are being made by these particular people? What are the decisions that are being made by these particular businesses for that particular situation? Which means that it's pinpointed, it's narrow in its definition. But when we go into our second semester, we will now study what we call macroeconomics. Macroeconomics, now we're looking at the broader landscape of economics. We're looking at things at an aggregated view. We are not looking at GEMS specifically, but we're now looking at the whole population of South Africa. What is the unemployment rate in South Africa? Instead of whether GEMS will take the job or not, right? We're now saying, what is the unemployment rate in South Africa? Instead of looking at the price of one tomato, we are now saying, what is the inflation rate of South Africa, or what is the aggregate prices of everything in South Africa? Instead of making the decision about whether to produce one computer or not, we are now looking at the total exports or the total imports of South Africa now. So that's the difference between microeconomics and macro. Micro, it's narrow, it's looking at individual things, whereas macro, it's broader, it's looking at aggregated things, right? And then, let me show you a number of examples. So this is in your study module, I believe so, if I'm not mistaken. This is in your study module. You will notice what I was talking about. Microeconomics, price of a single product, right? What is the change in the price of a single product? What is the production of one single thing that you're talking about, and etc. Right? So that's microeconomics. These are individual items that we're looking at. But when we are in macroeconomics, consumer price index, inflation rate, total production, exports and imports, and etc. Right? You're looking at the broader landscape. Now, this is actually a typical exam question where the lecturer will come to you and give you a situation and ask you, is this under macroeconomics or is this under microeconomics? So I would encourage you to go through this table so that you learn how to differentiate between items that go under macro and items that go under macro, because I can guarantee you, either in your assignment number 1 or in your assignment number 2 or in your exam, you are going to have a question like that one, which asks you to differentiate between the two. Then this one might not be in your study module, but it's a popular question from lecturers to differentiate between positive economics and normative economics. So when we're talking about positive economics, we're basically talking about facts. We're talking about cause and effect relationships. We're saying, what is the theory that is surrounding a specific subject? So for example, if I say the unemployment rate in South Africa is 10%, that is the fact. We can go and measure and get the unemployment rate in South Africa to 10%. Right? That is the fact. You cannot deny that specific fact. Right? Or if I say the exports of South Africa were 500 billion last year, that is a fact. We cannot dispute that particular fact. But when we go to normative economics, now we are talking about recommendations, value judgments, what ought to be, what we think ourselves. So for example, if I say, I personally think that the government should invest more money into the youth to reduce the unemployment rate. Right? It's now my opinion about what the government should do to reduce the unemployment in South Africa, which means it's now normative economics, because I'm talking about what ought to be. My desire is to have a lower unemployment rate, and I think the government can help us to do that through a specific course of action. That's a recommendation or a value judgment that I am making as an individual. Right? So that's microeconomics, versus macroeconomics, and positive economics versus normative economics. Now, that is just basically, we've covered now the introduction. Now you know what economics is all about, right? We've introduced what economics is. We said economics is the study of what? Of human behavior, is they try to make choices due to what? Due to the relationship that exists between what? Between limited resources and unlimited ones. Now, the question that you might have is, now let's go through each and every one of those single things that are important to economics. The reason why we want to go through these things is we want to understand one concept in particular. The concept that we are going to understand is the concept of what is called the economic problem. The question of why do we study economics? The economic problem. Now, for you to understand the economic problem, you need to understand three specific concepts. You need to understand the concept of unlimited wants, you need to understand the concept of scarcity, and you need to understand the concept of opportunity cost. Now, what are unlimited wants? Remember what I said initially when I talked about James, when I talked about myself. I said I like cars, right? I like gadgets, electronic gadgets. I like houses. So the things that I like or the things that I want are unlimited in nature. Be honest with yourself. Even you yourself, right? You also want a lot of different things. If I was to ask Onika, can you please list the things that you want? It's going to be a very long list. If I was to ask Zuko, can you please list the things that you want? It's going to be a lot of different things that you're going to be listing because your wants are unlimited in nature. Your wants are unlimited in nature. But specifically when we are talking about wants, your lecturers, there is a tricky thing that they do when they come to, remember I said some of the things will be multiple choice. There is a little tricky thing that they do. They want you to be able to know what is the difference between wants, needs, and demand. What is the difference between those three things? That's a common exam question or a common assignment question that you can get. So wants, we said this is unlimited desire that you have as an individual. But when you're looking at needs now, needs are necessities. For example, I need food. Right? I want a burger. I want KFC. I want the Bonairs. I want, to go to all these expensive restaurants. But I need to eat. I need food. So the need is the what? Is the food. But the want becomes all the different ways in which I can satisfy that specific what? That specific need. So a need is a necessity. Right? So I need shelter. Right? But I want a house. I want a house by the beachfront and etc. But I need shelter, right? So needs are the basic necessities that we have as individuals, whereas wants are how we satisfy those specific needs. Then demand, what is demand? There's actually a topic that we're going to do on demand. But in short, demand is where you combine want and ability. If you want something and you've got the ability or the money to purchase that particular thing, then it is now called demand. And that is something that is very, very important in economics. That's why I said there's a topic that is dedicated to what? To demand, right? So we've talked about unlimited ones, right? So what is scarcity? I think I've already explained this. Scarcity is you are basically saying that there are never enough economic resources. So let me give you an example, right? Let's talk about land, right? Land in South Africa. There is a limited amount of land that this country has. So even if we want to say, let's give everyone some land, we cannot do that because the land is limited in what? In nature. Only a specific number of people will have access to that specific land. Right? So that's a limited resource. Or let's not even talk about land. Let's talk about labor. Labor for the companies, right? How much labor is there in South Africa? There are 60-something million people in South Africa, maybe 65 million, right? But not all 65 million people can work. Maybe we can remove almost 20 or 30 million as being people that are older than 65 and people that are younger than 80. And maybe we're left with 20 or 30 million. Right? That is the labor force that is available for the what? For the people or for the companies to use. That's limited in nature. Right? We're saying that there is only a limited number of people that you can employ. Or let's go even deeper into a specific industry. How many doctors actually exist in South Africa? How many actuarial scientists actually exist in South Africa? So that's what we are saying. Or capital, the capital that you need to start your own business. Is it easily accessible? No, it's not. Why? Because it's limited. It is scarce in nature. So that is what we call scarcity. Now, there is something that we're going to discuss in a couple of minutes what we call resources in economics. Whenever we say resources in economics, there is something that we are referring to, but we'll discuss it in a couple of minutes. But I just want you to understand what scarcity means. We're saying there are not enough resources that are available. Now, when you combine unlimited ones and limited resources, right? Unlimited ones and limited resources, then you create a problem. And that is what we call the economic problem. We'll talk about it in detail later. But that is what we call the economic problem. Those two things, if you combine them, unlimited ones and limited resources, then you've got an economic problem. Now, in solving the economic problem, you have to bring in choice. People have to make choices, right? So when you make a choice, like I said, when you make a choice, so if I've got 100 rand, right, I can either go to Steak Neko and watch a movie for 100 rand, or I can buy Debonaire's pizza for 100 rand. I've got two choices, either go for a movie or buy some pizza, right? Those are my two choices. So if I decide that I want to go for the movie, I want to go and watch Thor: Love and Thunder, which just came out. Right? That's the decision that I've made, which means that I have forgone, right? I have forgone, or I have left on the table. I can no longer enjoy the pizza. So in economics, the pizza is what we now call the opportunity cost, or the cost of the opportunity that we have lost as an individual, because I can no longer eat that pizza. I've used the money for the movie. Right? So in the definition, this is now another popular exam question. What is the definition of opportunity cost? Opportunity cost arises because of limited resources and the choices that we make. Right? It is the what? It is the value of the next best alternative forgone. Now, why did I underline value of next best alternative forgone? It's because sometimes you can be given many choices. So I said that there is a movie for 100 rand and there is a pizza for 100 rand. What if there was a third option? What if you can also buy maybe a Coca-Cola bottle for 50 rand? Is the Coca-Cola bottle not also part of opportunity cost? No, it's not. We are saying the value of the next best alternative for God. What was the next best alternative that you could have enjoyed? And the next best alternative was the pizza, because it costed also 100 rand. The Coke is costing only 20 rand, so we cannot equate it the movie. We can only equate the movie to the same value that we got from the what? From the pizza. Right. So that's opportunity cost. We're going to do a couple of questions maybe next week or so. You will see that this one is always tricky, because sometimes you'll be given things where you need to add up things, where you need to subtract things, and etc., for you to determine what actually is the opportunity cost of an item, because it's not always as clear-cut as possible. So we'll attend to it when we get to those questions, so you can actually see some of the tricky things that are there. Now, the last thing on this specific slide is do not equate scarcity to poverty. Those are two different concepts. Poverty is where someone does not have what they need to have, but scarcity is a national problem. Even rich people have scarcity. Even Elon Musk, trying to go to Mars and whatnot, he faces scarcity. He faces a limited nature of resources, because he also wants a lot of resources, but he does not have them. Yes, he is rich, but he does not have all the resources that he wants. He also fails. That's why he's in business in the first place, so that he can try to increase the amount of resources that he has available at the end of the day. So scarcity and poverty are two completely different things. Do not equate them to one another. All right. So let's see. All right. So I'm just going through a couple of things here. All right, so let's talk now about resources. Right. So remember what we said, we've got unlimited ones, and we've got what? We've got limited resources. That's the term that we use, scarcity, limited resources. So what are resources in economics? What do we refer by resources? Because if we are not careful, we can say resources, oh, this means that the goods and the services, the caps, the whatnot, but those are not resources in economics. Those are not resources, right? But what are resources? What do we mean when we say resources are scarce or resources are limited economics? Now, there are four resources that we talk about in economics. This is what we call productive resources, or what we call factors of production in economics. There are four of them. So there is land, there is economic capital, there is labor, and there is entrepreneurial skills. Those are our four major resources of what? Of economics. Now I'll explain what they are. So there are what we call primary resources and what we call secondary resources. So land and labor are primary resources. When we talk about land as a resource in economics, we are not just talking about the physical land that we're stepping on, right? We are talking about anything that is natural, right? So for example, the sun, it provides solar energy. That is a natural resource that is going under land. For example, the wind, it can provide energy, right? Your wind turbines and whatnot can provide energy. That again is going to be a natural resource, right? It's under land. The plants, the trees, right? The forests that are in South Africa, all of those fall under land. The sea, the dams, the lakes that are in South Africa, all of those fall under natural resources or land, right? Then what about labor? Labor will refer to two specific things. There is physical labor and then there is intellectual labor. Physical labor is very straightforward. If you go, let's say, to a construction site, right? I know these days there's a lot of equipment there, but in the past, if you go to a construction site, there'll be those young men that will be there, that will be mixing the cement to create concrete. They are providing physical labor at the construction site. So that's one form of labor. Or intellectual labor. If you go to the same construction site, you might find there might be an engineer who sits in the office, drawing the diagrams for the roads and whatnot, providing advice. We need to do A, B, C, D, E, F, G. That's intellectual that's intellectual labor, right? So labor can also be known as human capital, right? So both labor and land are what we call primary resources, right? Then there are what we call secondary resources. Secondary resources, the first one is what we call economic capital. Now, this one can be very, very tricky. I don't lie to you, but let's go through it. Economic capital, we are basically saying that if there is anything that we use in production that is man-made, that thing is a resource. If you go to a farm and there is a tractor at the farm, now the tractor is not a good or it's not a service. We don't like the tractor for the sake of a tractor. We want the tractor because it will help us to till the land and produce our cabbages and produce our tomatoes and etc. So the tractor is economic capital, right? Or for example, me, in my own business that I'm running right now, I'm using a laptop so that I can communicate with you guys. The laptop is economic capital. Now, the mistake that students sometimes make is they equate economic capital and financial capital. Now, in economics, we don't talk about financial capital. We talk about economic capital. Financial capital, these are the rands that are in your bank account. In economics, we don't talk about rands as a resource. We talk about the things that the rands can buy, i.e. the building that the rands can buy, i.e. the equipment that the rands can buy, i.e. the furniture that the rands can buy, the tractor, the combined harvester that the rands can buy. Those are your economic capital. So you don't include financial capital or money under resources in economics. Please be careful on that. That's a typical exam question. The lecturer will give you a list of things and say, are these economic resources? If there is money there, money is not an economic resource, right? Capital or economic capital is the resource. Then the last one is what you call entrepreneurial ability or entrepreneurship. Entrepreneurship is the ability to combine everything. The ability to take land, labor, and capital and create a business that will function and make profit. Now, that is what we call entrepreneurial. That's actually a very important resource, right? Because if you do not have entrepreneurials in an economy, you are not going to succeed. Because entrepreneurs will take the land that is idle, will take the labor that is unemployed, will take the capital that is sitting at the bank, and then they'll combine everything and create a business. And that business will provide goods and services and etc. Right? So enterprises are run by entrepreneurs. Right? So we need entrepreneurial skill as a resource within an economy. Right? So I think it is now clear what resources are within an economy. Right? So I'll go back a little bit. Now that we know what resources are, now you're now asking yourself, so what about the goods and services? What is that in economics? So you can see that I'm going through a lot of definitions so that when we go through the study module, you know what we are talking about when you go through this. So in economics, right? In economics, right? When something is being produced, for example, a laptop, a cell phone, a service you got from the bank, a musician and whatnot, it's called an economic good. As long as you have to pay for it. If you have to pay to go to a concert, it's an economic good. If you have to pay to get banking services or insurance, it's an economic good. If you have to pay to get a plate or a cup, it's an economic good. So whether it's a good or a service, doesn't matter. It's an economic good as long as you are paying for it. But however, there are what we call free goods in economics. Free goods, these are things that you get without paying for them. For example, the oxygen that you breathe, you obtain it and you don't pay for it, right? Those are free goods. Then there's also what we call public goods. We'll talk about this maybe a little bit later during the semester, right? But public goods, we are saying that these are goods, you don't directly pay for them, but you still pay for them. So for example, the police service or the defense forces service in South Africa, you don't go and pay the police so that they guard your house, or you don't go and pay a SANDF so that they guard the country. But through your taxes that you pay to the government, you are essentially indirectly paying for that. So there is a proper definition that we're going to talk about what public goods are at a later point in time. But I just wanted to highlight that public goods and free goods, they are different things. Free goods, you don't pay anything for them, but public goods, you indirectly pay for them. You indirectly pay for them through your taxes and whatnot, right? They are provided usually by the government or by your municipality. For example, your street lights are part of public goods that you obtain as a consumer. Right. Then you might also be asked to differentiate between consumer goods and capital goods, right? What are consumer goods? These are goods that you obtain for current consumption. For example, if I buy food, I consume it right now, right? For example, if I buy a television, I'm consuming the television every day, right? Whereas capital goods, we've already talked about this one. These are goods that you obtain for the purposes of production. For example, your tractors, your buildings, your plant and equipment, and whatnot, right? And then there's also intermediate goods versus final and finished goods. This one is second semester stuff. We're not going to discuss much about it. But intermediate goods, this is the thing that these are goods that have not yet been complete. For example, flour. Flour is a good that you buy, right, from the what? From the miller. But you don't need flour for flour. You need flour to produce bread. So it's an intermediate good. Whereas the final good, like bread, you buy it for consumption, right? Then productive resources, I've already talked about this one, right? We've already shared about what productive resources are. All right, so let's see. Wonderful. Okay, so now I've basically given you guys the basics of what economics is all about. The basis of what economics is all about. Now, given the information that we have just discussed, right, there are two aspects that are now important for us to learn. The first aspect is what is called the production possibility curve. The production possibility curve. We are going to do this in our next class. That is next week. Then the second aspect is what we call the economic problem, understanding what the economic problem is. I'll highlight a little bit about it today, and then even in our next class, we'll also still talk about it a little bit more. So what is the economic problem? Why do we study economics, right? Why are you being troubled by this subject? Now, we study economics because we need to solve the issue of scarcity and budgetary constraints that we have as individuals. How can we make decisions so that we satisfy our unlimited wants towards the limited resources that we have available to use as a nation? Now, the reason we study economics is to answer three questions, which are the three economic questions, or which formulate the economic problem. These three questions are what to produce, how to produce, and for whom to produce. When we're saying what to produce, I am simply asking that, should we produce cups and plates, or should we produce bread, right, and food? Should we produce computers, or should we produce drugs? What should we produce as a country? What should we produce as a business? That's the question that we have as economists, because we need to know, because we have limited resources. We've got 1 acre of land, for example. So what should I put on the land? Should I put cabbages? Should I put tomatoes? Should I put a beetroot? What should I put on the land? What should we produce? That's question number 1 that we want to answer. Question number 2 is how do we produce it? Once we have decided that we want to produce bread, how are we going to produce the wheat? How are we going to produce this specific bread? Are we going to use a lot of labor and very few machinery? Are we going to use a lot of machinery and very few labor? Are we going to combine our resources this way and this way? Where is the factory going to be located, and etc.? How do we produce? Then once we have produced, let's say we now have got 1,000 loaves of bread. Remember, there's 63 million South Africans. How do we distribute, or for whom have we produced this 1,000 loaves of bread? Do we say stand in a line, you get a loaf, you get a loaf, you don't get a loaf? Or do we put a price there? How much will be the price do we put on that specific loaf of bread? So how do we distribute what we have produced as a what? As an economy. So that's the three economic questions. Now the study of economics, unit number 1, 2, 3, 4, up to 9, all of those that we're going to study, they are trying to answer these three questions. That's what they're trying to do. They're trying to answer these three specific questions. That's basically what they are trying to answer. Right. So just to reiterate before we close the meeting for today, I think we've got like 10 minutes left. Right. So what to produce? What are we going to be discussing about what to produce? Should we produce goods? Should we produce services? Should we produce economic goods, or should we produce free goods? Should we have public goods, capital goods versus consumer goods? This is like the last one. That's a typical exam question, right? This is tied into the production possibility. Does it benefit the country to produce more capital goods? Because remember, capital goods are used in the production. Like, should you produce more tractors, or should you produce more bread? If you produce more tractors, it means maybe in 2 years' time, you can have more bread. If you produce more bread today, which means that next year, you might not have tractors to produce the bread. So that's the quantum that the countries or the governments are facing. What should we really produce? How do we solve this specific question? Right? And then the second one, we said how to produce. We were saying land, labor, capital, right? How do we combine? That's the correct word. How do we combine these factors of production? Right? So if you see a question which talks about combination of the factors of production, it's talking about the economic problem of how to produce. Right? How do we combine the primary factors and the secondary factors? How do we use technology in our production? Then we'll talk about supply and demand theory. We'll talk about income distribution. All of those things fall under the third economic question, which is how do we distribute, or for whom have we produced a specific thing? Now, this is now an overview. I don't think this is in your notes, but this is now an overview of what answers can you get from those three economic questions. Remember, I said there are three economic questions. What type of answers can you get from the three economic questions? The first answer that you can get is the traditional economy. The second one is the command economy. The third one is the market economy. The fourth one is the mixed economy. What am I saying? What are these terms that I'm talking about? I am simply saying to you that for you to answer those three economic questions, you can use the command economy to answer those economic questions. What is the command economy? The command economy is an economy where political institutions answer the questions for you. So I'll give you, it's an incorrect example, but I'll give it to you anyway. So if you look at a country maybe like China or Cuba, I think, or North Korea, these countries in the past, they were command economies. So they had, a committee in the country, which then decided this year, we are going to produce A, B, C, D. We're going to produce 10,000 cars. We're going to produce 100,000 bushels of wheat. We are going to produce A, B, C, D. It is not people that are deciding. It is not the citizens that are deciding. It is the politicians that decide what the country will produce, how the country will produce, and how things will be distributed. Usually they use what we call ration in terms of the distribution, how the things will be distributed. So that's the command economy, right? The market economy, this is now, if you look at your USA, your UK, and a number of the European countries, they make use of the market economy. The market economy, I think the government does not decide anything. It is the people that decide. How do the people decide? Through what we call self-interest and the market forces of demand and supply. We'll get into detail about these things later. Right? But essentially what we're saying is that if people are buying the product, then the business is what will produce the product. If people are not buying the product, then the business is out of self-interest because they want to make profit. They will not produce that specific product. So the decision of what to produce, how to produce, and for whom to distribute is through prices in the market. It is through prices, or what you call the invisible force of the market. Then there's what we call the mixed economy, which is what we have in South Africa, where some decisions are made by the government and some decisions are made by private individuals and businesses. I.e., there is a combination of the government influence and also a combination of the government influence. For example, in South Africa, there's what we call the minimum wage rate, which is, I think, 22 rand. That's a decision made by the government, not by the businesses, but the government says you cannot pay someone less than 22 rand, which means that they are saying that in terms of how to distribute, you have to distribute at 22 rand an hour minimum. So that's how you answer the economic question. But when you go into detail about some of these things, you don't need to worry that much. So there will be some extra notes there that you can also read in your spare time. Then this one, we'll do it next week, the theory of the PPC. We're gonna handle this one during our following week. Right. So to summarize, before I open up for any questions, to summarize what we did today, right? So we introduced what economics is, right? We highlighted that economics is the study of human behavior, right? In making choices, right? Human behavior in making choices. Why are we making choices? Because there are limited resources and unlimited wants, right? That is the reason why we are making choices, right? So we highlighted scarcity, the limited nature of resources, right? Which are the resources that we talked about? Land, labor, capital, and entrepreneurial skills. Those are the resources that we talked about. But we said these resources lead to choices. These limited resources lead to choices. And when we make choices, there is opportunity cost, i.e. the value of the next best alternative for God. And then we say that if we combine all of these things, we can now understand why we are studying economics, which is the 3 economic questions, right? What to produce, how to produce, and for whom to produce, which I said can be answered through 4 economies: traditional economy, command economy, market economy, and the mixed economy. So this is just a summary of some of the information that we went through today. Right. So I would encourage you in your spare time, you can revisit these things. I'll also send you the slides of what I was doing so that in case you want to also read you also want to read the slides. So when we meet next week, we proceed to the production possibility curve. Then after we've completed the production possibility curve, we are going to do some questions. Right? We're going to pick from the past exam papers and from our previous assignments, and we're going to do some questions as a group so that I can see if you've gotten what we have talked about, right? So that's what we're going to do next week. 2 things. The first thing, a production possibility curve. The second thing, some questions that we're going to be doing so that we can see if we are still on the same page. Now, are there any questions for me before we close this session? Are there any questions for me? Okay, if there are no questions, yes. Hello?
Yes, this is Maria.
That's Maria.
I would like to know, do you have other group, WhatsApp group for other modules like analytical technique?
Yes, we have.
Oh, okay.
Yes, we have. I think I sent them earlier today. What I will do is I'll just resend them again in the group in case you did not see them. Are you in the economics 1A group?
Pardon?
Are you in the economics 1A group?
Yes.
All right, it's okay. I will resend them in that group. I will resend all the other groups in that group so that you can join through. But like I said, today we did economics. I think on Tuesday, we're going to be doing introduction to business management. Then on Thursday and Friday, we're going to be doing 2 other courses, but I'll highlight which 2 we'll be doing. But by the end of August, we'll have done at least 2 lectures for each and every one of those courses that you guys are doing. Okay, someone else has a question, go ahead.
Yes, yes. I would like to know the slides that we went through today. Will you be able will you be able to share those slides that we went through today? Because I've seen that you've got some extra information based on what we might have on our study material.
Yes, yes, I'll share the slides with you guys in the group. Not a problem.
So you'll share the slides on emails or through the
No,
WhatsApp?
on the group. I'll put it on the WhatsApp group, on the Economics 1A WhatsApp group.
Oh, okay. I mean, yeah, much appreciated. Thank you.
Wonderful, wonderful. Okay, someone says from the prescribed textbook, which chapters did you cover today? That would be the first chapters. Just look at your chapter number 1, chapter number 2. Those are mainly the chapters that we'll be covering for now. Chapter number 1 and chapter number 2. The basic chapters, the introductory chapters. That's what we'll be covering. Okay, any other questions? Someone says, I missed the first 30 minutes. How do I join the rest of the sessions? The video for this class will be sent in the group. I'll upload it on our YouTube channel and I'll send it in the group so that those of you that have missed the class or would want to start again, you can watch the video. Okay, I think that's fine. Any other questions? Okay. If there are no other questions, then I will see you guys on Tuesday. Please just always check your WhatsApp, the Economics 10A WhatsApp. I'll be posting things in that group so that in case there are any other classes that you might need, you can check in that group. I will make sure that they are available. Then by the end of the week, we'll have a fixed timetable for all the classes that we will be doing. But I'm just picking them little by little because I didn't want to overload the group with a lot of information that might end up confusing you guys. So I'll post as soon as I've made a decision on all the different subjects that you're doing. But for now, please take note, on Tuesday, there's Introduction to Business Management. So thank you guys for coming in. I hope you have a wonderful evening. Then my name is James from Varsity Unlimited Tutors. Then like I said, if you need any extra help outside what we are doing, feel free to text me and then we can talk more. Thank you guys.
Thank you.